Hi and welcome to the Market Alert for Tuesday, the 26th of April 2022. So big tech and Bitcoin shrug off Beijing bloodbath. Bond yields, bullion and black gold were battered during yesterday, which I said was going to happen in the metals markets yesterday. Financial markets are braced for stagflation as global growth optimism sinks. The playbook may not be relevant anymore. No, the normal rinse and repeat of the Fed. Recession warning rise, limiting Fed's inflation fight. And this subhead says it all. I said this a few weeks ago. However, we suspect the Fed will be back to zero interest rates and monetary QE far sooner than many expect. Of course, it will need to save the economy and the dollar. Gold tumbles below 1900, erases all post-Putin risk premiums. As if it had never happened. Amazing, isn't it? I said this last week, that everything is being, inflation, the war, etc., etc. I've gone over this time and again, is all irrelevant. Absolutely irrelevant. The fundamentals that used to dominate the markets are no longer there. It's all high-frequency trading and programmed algorithms to ignore any fundamentals, and that's why you saw gold being rammed and slammed and monkey hammered below $1,900 yesterday, and silver down towards the 23 area. News for today, not a lot really, just some medium impact news there, starting with the US core durable goods orders and consumer confidence. Market will have to make its own way today. We got up to 81 on the gold-silver ratio. You can see that silver's bouncing back a bit because it's actually moved lower there, back to 80. But this is an area where we could see a bit of a support for the silver at the moment. But when you look at the monthly chart of the gold-silver ratio, we're nowhere near the high there of 126 that we've seen before. So let's hope that we don't head back up to here, because silver will be going down to towards $11. That was $11 when it got to that area. So yeah, we'll see. But at the moment, you can also identify a sideways move there. It depends whether it's going to break out or actually reverse back off this, and then hopefully head back down in this direction, bringing that ratio to a more reasonable level. The average is 15 on the gold-silver ratio, which means silver price would have to rocket to come back up to those sorts of levels. Again, yesterday you can see the amount of silver that was traded in the paper market, another 500 million ounces of silver to get the market down through those 200 moving averages. Again, look at that in just a moment. First, let's have a look at the Dow. Huge volume for yesterday. You can see the market also trading down to 78, coming off this and moving back to the upside. So as the markets return back to the bullish side, after Powell's comments last week of being very hawkish, as the headline said earlier, I couldn't agree more, seeing that interest rates aren't going to be allowed to move higher as we go forward, because with what's going on in China at the moment, the supply chains and everything else, it's just going to absolutely see inflation move to the upside. They've actually painted themselves into a corner. They can't move rates up because it's going to destroy the stock market and the economy, and inflation is going to destroy it as well. So, like I say, between a rock and a hard place for the Fed. So yes, moving back up there, you can see the fib retracement levels there, plus you've got the 5, the 50, the 20 in between all of this as well, before you get to the 200, which ties in with 78% retracement there. Yesterday the market did its usual trick, sold off initially. You can see the volume dropping down there over the 30-minute charts, down to S1, and then the market reversing with a crossover. Stochastics oversold and moving to the upside, up to yesterday's high, where the markets had a bit of a struggle. One red bar there, overbought at the moment, but the futures market kicks off in 10 minutes time. Expect the market to go through the high. In the German DAX, a similar picture. When I can find it, that's not the one I was after. There we go. Demand in the German DAX yesterday, the range of this bar is narrower than Friday's bar at 0% there, double bottom from there to there, and now making its way back to the top as well. Still overbought, but that's not a problem if the blue crosses the red and we still see the momentum moving to the upside, and which again, I'm still convinced we go into the all-time highs. These markets aren't done yet on those levels. Let's just add in some fib retracements, and you'll see the market trading at 38 at the moment. These are the other fibs. We've got the 5 bar at the 50%. We've got the 20 bar just before the 62, and the 50 just before the 78, and then the 89 all out there on its own, which will be an area where you would expect the market to find some resistance or major resistance. In the 30-minute chart, very choppy yesterday morning. It was up, it was down, nice retracement there, back to oversold, and then the market moved up again, became overbought, then it came back down again, nice retracement, 89% oversold, and then moved up with the Dow in the afternoon and overnight as well, having retraced a little bit there to yesterday's close. Again, the market already through yesterday's high, unlike the Dow. And again, you can see it's got strength there to the upside in bucket loads at the moment. In the 5-minute chart, just a bit more detail, you will see that prices in the futures market sold off down to the BRN. We were oversold. The market then came back up during the futures and then retraced again 89% with demand, crossover volume there. And then we traded up to the previous day's low. This became a resistance. We were overbought. The market came back, retraced, and then made its way down eventually back to 89%. Well, actually a double bottom of the market here, but 89% from here over to here. So as we went through the morning, again, you can see that we were oversold there at the S1, I think that is. The S1, because we're below the low. And then the market coming back, and you can see the momentum changing there with divergence plus demand. And the market then moving up with the Dow and holding above the 5 bar moving average, apart from 1 bar here. And then as we approached the retracement from here up to here, you will see again we've got this situation where we were overbought, we've got divergence, and we then made our way to the downside. And overnight prices have continued to move to the upside, which you can see there, and now as I'm just recording, it's kicked off big style way above the high. They're going to start bringing this market back in the daily chart to 50 and 62 on the upside there. In the currencies, just a quick look at these. They're in here somewhere. Here we go. So the yen trading down to 89%, a lot of volume there. We've taken a bit of the heat out of the market, stuck at the 20 bar moving average for the GBP JPY. You can see there yesterday that we moved to the downside quite strongly. This low ties in here with the 89% retracement in the daily chart. And then we've got an 89%, 89% there as the market was oversold. Crossover moving back towards the DP, where the market needs to break through this in order to move back to the upside and head back to the highs with all of these fibs to get through the 20 at the moment. 5 bar is tying in with 50% retracement there. In the pound, lower again, but like the DAX, showing demand. We're overbought and we've got divergence here. I expect the pound to start moving to the upside. Bit of a retracement in this market. Again, these are the fib retracement levels. The 5 bar tying in with the 50% retracement there. And in the 30-minute chart, you will see yesterday as well, we kicked off with the market moving down. It was very choppy as it made its way down to the BRN here, and this is the 127 level. this red line here. Markets are sitting on the 127, but already with momentum starting to shift, and it has moved back up to the DP there as well. Just closing back below the 50 and the 5-bar moving average there, needs to close back above these. And then finally, in the metals markets for yesterday, we can see that silver trading down to the 89% retracement. A lot of volume there, like I say, 500 million ounces in paper money. Once more, the market trying to get back above the 200 MA. It needs to get back above there. I think we might have a bottom in place here, although I would love to see this actually go a lot lower to add some positions to this. If not, I'll just have to wait for it to retrace an 89% in the daily and then pick up from there. But we're certainly oversold, that's for sure there. So watch that 200 moving average today. That's going to be key. And of course, 1 o'clock we're guaranteed the market to be moved to the downside. If we look at the 30-minute chart for yesterday, they gave the market the hammering they wanted to. They got through the 200 MA. You can see the cluster here of volume and also the absorption with the supply coming into the market. The price bars remaining green and then moving to the upside. And again, you can see that divergence in there as the market momentum was shifting, despite the fact the market was sideways. Gold, as we saw from the headline, took an absolute pounding yesterday, trading down to the low to the left, which was 18, I think that's 1889. It is. Let me just drag that out so it's a lot clearer to see. Yeah, 1889. A lot of volume there for yesterday as well. Market bouncing at the moment. Again, you want to get in the fib lines, have a look, see what we've got. So we've got the 50 and the 5 at 38, and also this is where the selling took place yesterday to drive prices lower. So 38% is actually got 3 areas to overcome in order to move higher. And if it should do that, then we've got the 20 bar at 50 as well. We don't get clear until we get to 62 through to the 89, which is not going to happen anytime soon, would be my opinion there. And it's only an opinion given what they've been doing for the last few weeks and the last 20 years in suppressing the prices of the metals, despite obviously hyperinflation, etc. So the dollar moving up again yesterday, giving them the opportunity to do this. And if you look at the monthly chart of this, you can see that we're nearly towards the 102. Like I say, watch the 103 level. That's going to be very, very important, because that gives you a triple top and an area where the Fed may actually give up on raising rates. And then, of course, if they have to print more, the dollar goes south, because they will again devalue the dollar by printing more. In the crude oil market, this too showing some signs of moving back to the upside. Yesterday the market moved lower. If you just draw in the fibs, you'll see you've got an 89% retracement, bang on 89, increase in volume, oversold, market's free to move to the upside. And we'll just remove this one here. So again, you can see that they've had the shakeout they wanted. We're past the options expiration for silver as well, while I think about it. Missed that one. And there you can see prices moving to the upside as well. Now the fibs, any move back to this sideways channel that seems to be developing in the oil market at the moment. Okay, that's it for this one. Just another note, I've got a video that I recorded last week, but I haven't been able to get it uploaded to the site because the chap who takes care of that is back off his holes today. That will be on there. A full audit of trades from February through to April. A quarterly report showing real-time trades in an MT4 report, and those returns as well, which you will have seen during the first 90-day trial of the software. So just so that you can see that it works, I will be posting that at some point today, and I will mention it tomorrow as well in the market alert, so you can go and have a look at it. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.